Thank you. Good afternoon. As Torben said, I'm Sarah Santos. I'm a Senior Vice President, also on STG's Executive Management Board. And since January of 2020, I've been the President of the North America Online and Retail Division. Been with the company about 19 years and held various positions. Prior to that, I did the same for several other multi-channel retailers. So today, I'm going to start off with what I'd like you to take away today, and that is that STG is in a lead position in the U.S. handmade market online. We're an omni-channel business, and we've got a growing retail component. And despite our lead position, we're optimistic about further growth in the online channel. So let's get into the details. The division accounts for about a third of group revenue and over a quarter of the group's EBITDA. Our main product category is handmade cigars, by far, followed by accessories, which includes items like humidors, cutters, lighters, and the like. As you look to our recent performance, you'll see in 2019 that on top of organic growth, we also realized synergies from the Thompson Cigar acquisition. And then moving forward to 2020, multiple factors were at play. Our bottom line certainly benefited from scale as retailers transitioned from brick and mortar to the online channel. Our top line benefited from increased smoking occasions for consumers, which raised basket sizes, as well as a reduced promotional stance. Moving into 2021, Q1, we saw a similar dynamic to 2020. And in recent months, we have seen a portion of consumers' wallet share transition back to our retail stores, as you saw in Regis's results. The division's comprised of 5 distinct business units. The flagship amongst them is Cigars International, which is omni-channel and celebrating its 25th anniversary this year. 10% of the sales for this business unit come in via phone calls to our contact centers. 7% of the sales come through our retail stores and the balance online. The other business units in the division reflect a strong history of M&A integration, starting with the most recent, the major acquisition for the division of Thompson Cigar in 2018, followed by Pipes and Cigars, an acquisition in 2013. And this is a business unit where nearly 90% of the sales are pipe and pipe tobacco products. Next, we've got Cigar.com in the portfolio since 2005, and last but not least, Cigar Bid, which is a wholly digital auction proposition. Many medias, including Google and the major social media outlets, prohibit the advertisement of tobacco products. As a result, catalog marketing direct to consumers, which is permissible, is the lead influencer of sales in the division, followed by email and traffic driven by search engine optimized content. So when we look at the online competitive landscape, we make up 46% of the online channel. Of that, Cigars International alone is 25%. Leaving a pretty large delta between ourselves and the next largest competitor. As you look at the pie, there's a large slice that's comprised of many smaller retailers whom originated and still remain with a foothold in brick and mortar retail. And this is a slice of the pie in recent years we've seen grow, particularly during COVID, as shopkeepers adapted and put up their own web shops. What differentiates us from the smaller players in the category is a strong proprietary brand portfolio. Our sales are comprised of 35 to 40% proprietary brands, and another 16% comes from our North America branded General Cigar and Forged Cigar portfolio, leaving about 35 to 40% third-party manufactured products. While the category is traditional in many ways, it's quite mature in that pre-COVID, we were already seeing 60% of the volumes move through the online channel. So let's take a look at our consumer file. When we began to see the impact from COVID, it happened to coincide with a refresh of our digital propositions. The two combined have led to our active consumer file topping 1.4 million consumers. And our retention rates have grown above 60% and have been sustained. This is a quite strong retention rate for an e-commerce retailer, so I'm quite pleased with that. If you look to the value of our consumer file, while we've seen material sustained improvements in our basket sizes over the last 18 months, over time, the revenue generated per consumer as well as their contribution was quite stable and predictable over time, growing as the years go by that they engage with our businesses. So another distinguishing characteristic of our multi-business unit online division is that we have a focus on consumer segments. And this was created out of a project we call Project Winston, named after Winston Churchill, which is appropriate given our location today. We even got to see a statue of him during some sightseeing this weekend. And the purpose of Project Winston was to further delineate our online propositions from one another and focus on particular consumer segments. In establishing that proposition, we analyzed over 20 variables to determine which drove significant differences in consumer behavior. So for example, we found that age does determine a significant difference in the price paid per cigar, as well as the number of cigars consumed per year. There we go. Some other examples include consumer segments that are quite exploratory across brands and others that stick within a tight assortment of products that they know. So a couple examples of how we've delineated our online propositions include our Thompson Cigar business unit that focuses on steadfast stems that stay in that tight assortment offers a continuity program offering automatic shipments at a cadence of the consumer's choice. Now, when we look to our cigar.com proposition with a focus on hotshot Harleys who desire the status that is unlocked in the upper tiers of that division's loyalty mechanic with early access to new-to-market products, as well as access to rare and limited edition products. This is an area that I could go on quite some time about, but I'll leave it at those examples, and if you're interested in more, I'll take them during questions. So in order to create and adapt these propositions, we needed to assemble a deep business intelligence and analytics capability. We did this through a combination of ongoing testing, consumer insights, as well as machine learning that we apply in the form of personalization. While the benefits from that personalization are driving the increase in basket size as well as retention rates, they ladder up to an increased lifetime value from consumers over time. In the future, you can expect to see further investments in these areas, particularly in the area of pricing, where you may see dynamic pricing that's cued off signals on supply and demand, particularly in the tail of our portfolio. We combine the insights generated from our online division with those in the retail channel. And some of our findings are that a third of consumers only engage with the online channel, a third only engage with brick and mortar, and the remaining third participate in a hybrid of both channels. And as Regis began to mention earlier, we found that consumers begin their engagement in the category at brick and mortar, and they continue to purchase the majority of their cigars there until they've been in the category from 5 to 10 years. Then we see the inverse, where a larger portion of their cigar volumes are purchased online. While a larger percentage of cigars are purchased online, we estimate the value of the two channels to be quite similar, although the margins and EBITDA at retail are higher than those seen online. So thus we see this as an untapped value pool for STG. Today, our retail footprint stands at 7 stores, of which 6 are superstores. The most recent 4 were opened in the Texas and Florida markets, and the previous 3 were in Pennsylvania. With the recent openings of stores, we were able to assess the financial returns of the stores, as well as the impact on the catchment area in which we open them. So we'll take an example with the Colony, Texas location, which was opened in 2018. Through this location, we confirmed that the Cigars International retail experience appeals to a broad segment of consumers. And it's got a draw from over a 30-mile radius surrounding the store. May seem like a large radius for a retail shop, but keep in mind that there's fewer and fewer areas to smoke publicly due to smoking bans. We've also found through opening the recent stores that there is an initial dilution of our online share in the year following the opening. After that year, we see a strong halo effect to the tune of double digits. The Colony store, which just had its 3-year anniversary, has delivered 25% ROI during that period. So because the borders to the US have been closed down until very recently, I don't assume many of you have had the opportunity to come experience one of our stores. So I've brought a short video with me to give you a peek inside.
So we recently opened our newest store to the retail division, and that's in the Colony, Texas, which is just outside of the Dallas-Fort Worth market.
We're very busy here at the Colony, pleasingly busy here at the Colony. I would say on an average week we see anywhere from 1,000 to 2,000 people out these doors.
We don't sell cigars, we want to sell an experience. We want everybody that walks through our doors to feel happy, welcome, and just love being here.
So in conclusion, we've been seeing the retail stores deliver the expected results. And we're expecting to open another 6 to 8 stores over the next 2 to 3 years. We'll continue opening those stores in the areas where we have infrastructure established initially. Each of those stores will require an investment of $4 to $7 million US, and will cover things such as the initial lease obligation as well as our beginning inventories. Those stores are expected to deliver above a 20% ROI within their first 3 to 5 years of operation. In order to achieve our strategic must-win battle of growth in handmade cigars, we will couple this retail expansion with an ongoing data-driven consumer focus in our online channel with focus on continued testing, personalization, and maturing of our loyalty mechanics. So, thank you. And with that, I'll hand it back to Torben.